Sup, freaks? It's your boy Marty Bent here to introduce this episode of Tales from the Crypt. I sat down with Tracy Shuchart from Hedge Fund Telemetry, better known, I shouldn't say better known, also known as Shy Girl on Twitter, at CHIGIRL. Shy Girl is somebody I've been following for years to get information about the oil and gas markets. She's been on my finance and economics list for some time, so it was a pleasure to sit down and speak about Bitcoin and the oil and gas markets with her. Can't wait to do it again. I think we're actually going to have a separate conversation for a podcast we're spinning up for Great American Mining, so be on the lookout for that as well. I think you guys are really going to enjoy this episode. It's a nice little back and forth. Brought to you by our good friends at Atoms. Atoms. We've teamed up with the shoe company, freaks, ATOMS. I know my pronunciation of things is lacking sometimes for many of you freaks, so I figured I'd spell it out. ATOMS. It's a shoe company with the low time preference individual in mind. Okay, they're building shoes for you freaks that are going to last a while, and that's because they form right to your foot. They have this foam cushion. Believe me, I wear my pair. It's completely broken. It's like you're walking on cushions, and on top of that, they have quarter sizes. So instead of getting a 10.5, 11, 11.5, you can get a 10.5, 10 3/4, 11, 11 1/4, 11.5. They're getting it so that it fits your foot perfectly, so you're as comfortable as possible. On top of that, they have these elastic shoelaces that allow you to put your shoes on and off without messing up the shoelaces. So you save time not having to tie your shoes. With the Atoms, it's got microbial copper embedded in it, so anybody with smelly feet, apparently that's antimicrobial and it takes away bad smell. So you guys with smelly feet out there, here's a shoe for you. On top of that, they allow you to wash your shoes. You can wash the shoes, get all the dirt off, just air dry them, and they're good to go. A great return on your investment. A shoe for the person with low time preference in mind. On top of that, they accept Bitcoin and Lightning. I hooked them up with open node company for their checkout to get better Bitcoin payment and Lightning payment processing flow, I guess you could say, for their users. So you can go check that out. When you do, make sure you use the link atoms, ATOMS.com/TFTC. You're going to get a free pair of their dope socks at checkout if you follow that link. Again, that's atoms, ATOMS.com/TFTC. Go check them out. This episode is also brought to you by friends at the Cash App. You already know all about them. If you don't know about them, let me tell you, they're helping to stack sats, send sats, sell sats, receive sats. Sats are the standard. Getting rid of that unit bias. We're no longer buying fractions of Bitcoin. We're buying whole sats. They've got a sats back boost. And on top of that, they have the ability to DCA in the sats. If you want to set it and forget it, just throw a chunk in every week, every 2 weeks, every day. You can do that on the Cash App as well. You can dollar cost average in, set it and forget it. If you haven't done so already, you can go download the Cash App, and when you do, use the code STACKINGSATS, that's STACKINGSATS, you're going to get $10. $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Owls Lacrosse. Check it out. If you guys are new to this podcast, I hope you enjoy it. Welcome. I know I've had a lot of people reaching out in DMs saying that they're new to TFTC, whether you found us from Barstool, from 51 Strokes, or the Yak, or just through the grapevine. Welcome to Tales from the Crypt. Welcome, freaks. I hope you guys are liking the content. If you are, make sure you subscribe, give us a rating and review. It helps us get noticed on these platforms. That's something we're trying to do. We're trying to get good quality Bitcoin information out there. So if you freaks are new to TFTC, I recommend you put your helmets on, keep your hands inside the vehicles, enjoy the ride, and let Bitcoin do its thing. Ticky.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven. I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here. What is it? Tuesday afternoon, mid-Tuesday afternoon, 2021. Very excited for this conversation. I have somebody on the podcast who I've been following on Twitter for quite some time, is an OG on my finance and economics list, and somebody who I follow to keep in touch with oil markets, particularly. I'd like to introduce you freaks to Tracy Shuchart.
Hey,
AKA,
guys.
AKA Shy Girl on Twitter, Shy Girl.
Yeah. Hey, thanks for having me. I know we talked about this last month, so glad we were able to get this together. Let's see how this goes.
No, I am as well. Particularly, again, because I've been following you for so long. And I think, as we discussed last night, we had a little pre-podcast call last night just to talk about a few things. I think the intersection of Bitcoin, particularly Bitcoin mining in the energy sector, is going to be a growing theme this year and the years to come. And you're somebody who I've trusted for oil and gas knowledge for some time now. So I'd love to get your perspective on that. But before we even dive into oil markets as they may pertain to Bitcoin at some point in the future, I'm just really interested to get a better understanding of your background. I know you were on CBOT at one point, the Chicago Board of Trade. You've delved in futures markets and managed futures, which is a background that I have as well, working for a managed futures fund in Chicago for a bit. So I think we could use this episode to help educate people about sort of the commodities markets, oil markets specifically, and then we can jump into Bitcoin from there.
Yeah, that sounds good. I started in this industry actually in a boiler room, like calling like 400 people a day saying, you want to buy some options? So really that's how I got my start, and then kind of moved my way up from there. I worked on the floor, managed a trade desk on the floor, which was, a great experience. It was really cool, really exciting, literally like everything you see in the movies. But I was kind of there on the tail end. And then I moved on kind of for myself. And then I worked at a family office. And now I'm a strategist at hedge fund telemetry. And then I also trade myself and still work for a family office. So I've kind of run the gamut in this industry, from grunt to something a little bit better than that.
Yeah. So how much has it changed since you've been in? Because I remember working on West Jackson Street and having old pit traders telling war stories about trading in the pits in the 80s and 90s, and talking about how much of a shame it was that the pit got replaced by a server farm, essentially.
Yeah.
The dynamics of this commodities markets have changed significantly over the last few decades, correct?
Yeah, absolutely. I mean, you've gone, it's, kind of saw that gradual change where you went from, an analog system basically to, a computerized system, all the way to now you have, automated systems and, HFTs like Citadel and things like that. So it's really kind of progressed a lot really within the last, 10, 15 years. Just kind of technology's accelerated that whole vibe.
Yeah. You've gone from sending hand signals on the floor to laser beams across the
right, to what's the fastest nanosecond we can get information to the exchange so we can get in front of everybody else.
Yeah, it's crazy how much how quickly it went from completely manual human to human interaction to this highly digitized world. And it was fun hearing the pit traders talk nostalgically about bullshitting in the pit and making a ton of money in the process.
Oh yeah.
And that's what when I worked in Chicago, I always thought, and I was reading about Bitcoin too, I always thought particularly the managed futures folks would hatch on the Bitcoin pretty quickly because it's like often referred to as a digital commodity, and
Right.
people tend to approach it with a lot of people, not everybody, but a lot of people tend to approach it with the long-term trend following mindset, especially if you have a time horizon bigger than 4 years. A lot of Bitcoiners think that if you're holding over a 4-year period, you'll be pretty well off. And so I thought like the trend following, very risk averse managed futures crowd would sort of jump into Bitcoin, or be some of the first to. But CME has the futures contract, but
I think a lot of it is due to regulation, people, and kind of the lack of products available. I mean, a lot more are on the market now, right? And there's a lot more funds that are doing this, like USCO and people like that have started those funds. But really, there was and that's, a large buy-in. So, I think it's just really, there's a lack of products out there, derivative products, ETFs, things like that. And I think people really, on that side, on the managed future side, kind of worried about regulatory issues because, the NFA is very strict. So,
yeah. And in turn, because that's how a lot of managed futures funds market themselves, right? Is portfolio insurance. It'll be the part of your allocation that performs well when things go to shit, and that's Bitcoin's been described as that, as central bank incompetence insurance. So the asymmetric or possible returns. You just mentioned many reasons why it probably wasn't the case, regulatory being the main, but it always, in my mind, sitting as an analyst at a managed futures fund and thinking about Bitcoin as it's like the two go together, like PB and J.
It's true. Maybe we'll give somebody some ideas out there.
Hopefully. But yeah, so we're here to talk mainly about oil and gas, and then maybe some Bitcoin at the end. And so that's one thing we've been covering over the course of this year pretty loosely, not as much as we were in early to mid 2020, but the crash in oil prices in March of last year, to the point where the May futures contract traded negatively for some time. And I guess, if anything, that particular event highlighted the control that maybe the Saudis and the Russians have over the oil markets, and how fragile the shale industry was here, how maybe spread thin is probably a better word, especially financially. And so we covered what happened when it happened pretty aggressively for a month or two, but we really haven't touched on what's going on in the oil and gas markets in quite some time. So I'd love to get your perspective on where they are, particularly here in the United States, and what the market looks like moving forward, especially in the context of OPEC plus.
Right. Well, kind of leading up to that whole fiasco, right? We already were seeing, problems within the shale industry, financially speaking. There were already a lot of companies, there were already mismanagement. I mean, it was kind of like when shale first started, right? They were throwing a bunch of money. It was the newest thing. Here you go. Banks wanted to give them money, right? And then we had that oil crash, that 2014-16 oil crash. Banks got a little, skeptical. So then they had to kind of go into the private equity. Private equity was like, yeah, it's great. We have all this money. They had all this money at that time. Nobody was, really, because it was after the 2008 GFC. Nobody was, they had a ton of money in private equity. And then we had this just happen. So now, people are a little bit more, they don't have so many options as people trying to throw them a lifeline anymore, right? So that's where we started to see after this a lot of mergers and acquisitions, a lot of companies that disappeared entirely. And even though that was sort of coming down in the pipeline eventually, I was talking about this last December, that's what we would probably see this year in that industry. But obviously the oil price crash kind of sped up that timeline a lot. So where we are now is, looking forward into the market. I mean, I think we'll still have some more mergers and acquisitions. Um, the production has come way off. In 2019 at the height in December, we were at 13.5 million barrels a day. We're down to about 11, and we probably won't see 13.5 million, I would say ever, literally. So just because of the lack of capex that's come along, right? Because all these companies were told, we're not, nobody wants to give these people money unless they actually have a plan, right? There's been a ton of capex cuts, and that's happened actually across the last 2 years, but really this year, incredibly. And because they had to shut down so much production quickly, right, in May after the price crashes, a lot of those wells, they're just not going to start up again because they're just not profitable, right? They're only going for their profitable wells. So older wells that were nearing the end of their lifetime, those will never get tapped again. They'll just be shut off. So you're having, and in the shale industry, you have to constantly be drilling because they don't have, 10, 20, 30-year lifetime that say deep oil wells have. So you have to constantly be 6 months ahead of yourself just to have consistent production going on. So that's pretty much gone. And then you add in decline rates of the existing wells and things of that nature, then really you're looking at we're never getting back there again. We'll probably see consistent decline, yearly decline, actually.
Interesting. Yeah, and so I'm touch on a couple things here, and actually one thing we like to focus on a lot here at TFTC is the misallocation of capital that easy access to money via central bank policy has created. And the shale industry is a perfect example of that. You touched on it a bit in the beginning of your explanation right there, but I think we should expand on this particularly, right? Because I remember actually in 2016, 2017, working at a third-party valuations firm looking at PE portfolios, particularly some with some oil assets, and seeing some of these oil and gas companies take out $100 million PIK loans at like 17%, basically projecting that the price of oil would sustain itself above $80 a barrel, as sort of contingent in getting that money in the first place. Was just like, even then in 2015, 2016, it's like, what are these people thinking? Like, or 2016, 2017, like the price of oil is never going to be over. Exactly. Like it is over $80 an hour, but this money's getting out there. And how much of that is the risk appetite of the PE firms versus the access to the cash that Fed policy provides?
Well, yeah, I mean, that's exactly it. And the thing is that they've never had anybody tell them, until really this year when everybody kind of cracked down and they were out, they're sort of out of the options, right? Banks don't want to loan. PE just got burned. Maybe, the venture capital guys would have come in. But that's the thing, is that they've never had sort of to kind of control themselves because there was just so much money thrown out there, and they didn't care what interest rate. It was just so much excess, right? And so now they're kind of discovering that things got to change because nobody, the money's kind of dried up out there, and they can't survive anymore at that. And now we've had we've been consistently around $40-$50. So I think they figured out that this is kind of the spot that oil is going to be in for a little bit. My projection is I think we'll see a price spike down the road just because of the lack of capex, but I don't think things are going to switch over as quickly as everybody thinks. But that's, well within, the next year to 2 years. But for now, budgets they're gonna have to figure out what to do, because really a lot of their break evens, right, are 60, some at worst, some of them are 70. So, it's, it's throwing cash in the fire. Right.
And so again, I want to keep digging on this, particularly because I guess what I'm trying to get a better understanding of is when all the expansion in the shale industry was happening due to access to easy money, or was anybody at the time sort of waving their hands saying, hey, maybe we don't need these many rigs, these many well pads to be drilled?
No, that's the problem. That's exactly the problem. And they repeated themselves, right? I mean, they had all this money and they repeated the same exact mistakes after that 2014, 2016 oil crash. Because nobody ever said no, right? So nobody ever, this is really the first year that I've seen pressure to really change. And a lot of that, because there's green pressure, right? You got all this green, so, you have all this ESG pressure on oil markets. So you see these changes that, the major Shell, Shell's actually kind of expanded their portfolio over the last few years, but these sudden U-turns in BP and some of the the bigger companies, not Shell, right? but yeah, I mean, nobody ever said no. That's the problem with these guys.
Yeah, but where does the buck? So this is a Fed hating podcast, if you couldn't tell already. Would this have happened if the Fed hadn't unleashed the policies that it did?
Oh, probably not. No, because there wouldn't have been so much money splashing around in the system, right?
Right.
So, and I think that's led to obviously a lot of problems and a lot of excess in a lot of other industries, not just shale, but particularly, the shale industry is sort of infamous for that.
Mm-hmm. No, yeah, I mean, that's one thing we like to say. Great American Mining is that Bitcoin mining and the oil and gas industry specifically are such a good fit because they both represent ruthless competition in spaces that are really driving humanity forward, whether it be the extraction and delivery of fuels to the masses, or a digital bearer asset in the form of Bitcoin.
Yeah, exactly.
Which is, yeah, I'm actually very bullish on the oil and gas industry because
I am too.
because of the
I'm literally, this is the first year I turned bullish. This year is the first year that literally I've been bullish this industry since I started.
Really?
Yes.
Why?
Believe it or not. So, because I've seen, because this was the year to turn bullish, because I was looking at what was happening and, what I knew, I mean, this was even before in 2019. I had already projected that we were going to have a supply problem, right? Like we were going to have a supply crunch coming down the line, and my timeline it's a little closer now. It was a little bit. I was 23, 24, but then when this spring happened, again, like I said, kind of moved my timeline up a little bit because we had put a lot of people out of business, shut down a lot of production a lot faster than probably normally would have happened, right? But so yeah, so I'm bullish for literally the very first time, I think, since 2009. So and I'm very bullish on oil equities right now, because I mean, if you look across the board, I mean, they've gotten a beating for so long, right? And usually when you're looking for something in your portfolio to build a portfolio, you want to look at stuff that, was 80, 90% off, right? And that kind of fits the bill right there.
Yeah, there's a lot of blood in the streets and a lot of people It feels like the oil and gas industry is getting attacked from all angles, whether it be misallocation of capital leading to bad business plans, or just the whole climate crisis, Green New Deal, ESG movement. That's
Right.
that's growing. So it's sort of the industry. I don't want to say it's backed into a corner, but it's definitely needing to get creative and be resourceful, to prevent any narrative blowback in the public.
Absolutely. I mean, I think this ESG thing, well, because I don't know if you've looked at some of the ESG funds, they've got like MasterCard in there. They've got there's like some of these ETFs that are so full of nothing having to do with ESG, because really all you had to do was say, yeah, we're an ESG company, but you didn't have, there's no kind of rule or certification. You just said, yeah, we're ESG. And they went, oh, okay, we'll put you in this ETF. We'll wrap you up and here's an ESG. And some of them are just ridiculous. So they just passed a new rule that there's some kind of have to prove something that you're, but it's still basically unregulated. Anybody could say they're an ESG company and get thrown in a basket of stuff.
Yeah, it all sounds like a big virtue signal, honestly.
Yeah.
Nobody really caring about fixing the environment, instead just trying to work the loopholes so it looks like they're fixing the environment, and they benefit financially from it too.
Exactly. That's exactly what's going on right now.
Yeah. Well,
not that all of them are like that.
No.
In case somebody comes after me, but I would say most of them are.
Yeah, and it's a shame too, because it really, I don't want to say dilutes the conversation, but it doesn't allow people to work within a framework that's being honest and actually trying to solve problems, instead of just signaling that you care about something and really just care about how people perceive you. I'm sorry, I'm going on a rant here, but again, this is why I'm bullish on the Bitcoin, or excuse me, on the oil and gas industry, in conjunction with Bitcoin, is because I think Bitcoin can help solve a lot of these problems, right? And tying it back to capital misallocation, I think that you start there, right? Because you disincentivize, or I don't want to say disincentivize, but having a alternative revenue stream in the form of being able to use gas at the well pad that would otherwise be flared or vented to mine Bitcoin creates an alternative revenue stream that maybe incites you to drill less wells, that is cleaning up your waste, so you actually look good from an ESG perspective.
Right.
If you need to check that off your corporate checklist. And so in terms of creating a revenue stream that not only alternative, but it's driven by a service that's demanded by the market 24/7, 365, in the form of Bitcoin transactions are happening at every second of every day, and there's demand for those to be mined at every second of every day. So that's completely separated from the drivers of demand in the oil and gas markets per se. So you always have that backup alternative revenue stream. You've got your oil if you need it, but hey, maybe you don't drill as many pads anymore because you're going to make money mining Bitcoin, and you may be a little bit more risk averse.
Right. Yeah. I mean, absolutely. And I think there's a lot to be there, because there is a lot of waste. Well, especially, nat gas, just because of, all the flaring and whatnot, and that can be harnessed as energy. I mean, you could even essentially, if a company needs to use carbon capture, right? Which they're all looking at right now, trust me, because the environmentalists are after them. So all these companies are looking into carbon capture technology, and really what you could do is use their excess carbon actually, and to turn it into fuel. You could do that cheaply as well, and to turn it into an energy source. So there's a lot of possibilities there. Otherwise, they just carbon capture and they stick it in the ground.
Which seems like let's just point this in the ground.
I know, right? They're like, we'll just put it back in. I don't know. I'm like, It does sound odd. It sounds like, are we going to blow something up at some point?
Right. Well, look at all these crazy things we're doing to figure out this problem. It's a big problem. So, from your
Right.
perspective, how big is this waste gas, stranded gas, flared gas problem?
I mean, it's a big problem. You used to, you could go drive through Texas and you can see it. You can literally see it. You can see them flaring everywhere if you drive through, like the Permian Basin, and it's all the time. It's 24/7, right? It's not like they just flare a well and that. I mean, you can find wells being flared all the time. So it's the quickest, obviously the quickest way to get rid of it because they're looking for the oil. So definitely that's a resource that, if you can find a use for it and they don't have to flare it, right, then that's a win-win situation.
Right. And then, and then I guess we get into the concept, like even pipeline construction. So that's what are the alternatives that exist now, right? Like how does a producer, particularly when they're fracking and pulling oil out of the ground, obviously a lot of gas comes out of the ground with that. They try like, what are the options that a producer has at that point with that gas?
So with that gas, what they can do is they can they can flare it. They can use carbon capture technology, which attempts to, capture that and then stick it back into the ground. I don't know. And that's really your only option at this point. There's not a lot of other options. Your other option would be to take that carbon into it and turn it into a fuel source, which, there are a lot of people, trying to do that right now. The only one that's been really successful is actually NASA, that's using that like a solar technology. It's actually really cheap. And it's these like solar films that collect the CO2, and it oxidizes and turns it into a fuel source. I'm not a NASA scientist, so that's my basic understanding of how it works. But that's commercially available as well too. So I'm sure that companies, it's easier for companies just to keep doing what they're doing, right? And until somebody says, hey, you have to change your ways. So that's really why companies haven't really looked into it until recently, when sort of regulators came down on them. Banks said, we're not going to finance you anymore because you had just this year you had Goldman, Morgan, BlackRock all say we're not going to finance oil and gas companies anymore, right? Because they're we're getting out of the coal industry, things of that nature. So now they're actually forced to, because now they don't have now that money's involved, right? Money's over their head. Now they're going to be forced into looking into these technologies further and being able to invest in them. So that's kind of a big thing in the industry right now that's just starting, but I think that has a lot of room to grow. So if you're an investor, look into some carbon capture technology companies, because I think going forward, that can be a good area to investigate.
Yeah, and it's from the regulatory perspective, it's getting worse. I mean, North Dakota has very strict flaring regulations. It seems like the Railroad Commission in Texas is keen on bringing similar restrictions down to the Permian, and then Alberta obviously has the strictest in North America, I believe, in terms of not being able to flare or vent at all. So it seems like the regulatory burden is only going to get heavier from here.
Yeah, I mean, I think they're going to get hit from all sides. Really, you're going to get the environmentalists, you're going to get the funding sources, you're going to get the regulators within your state, and now with the Biden administration, that we might have federal regulations on top of that. So
yeah, what are you expecting from a Biden administration?
I mean, I think that really, if you look at his track record, his voting track record, he's probably one of the most pro oil and gas of all the Democrats, right?
Mm-hmm.
But but there's always a but. And his voting record, I mean, he voted for Bush era regulations and things like that within the industry. So he's voted, Republican oil and gas, pro oil and gas. His main thing, the only thing that he's really been against is, Arctic drilling and in Alaska refuge area. So that's been his big thing since the 70s. So, but that doesn't really matter so much. I mean, they just had an auction and nobody wanted it because nobody wants to be that guy. But so I think it's pro the thing that's going to be, now that we have kind of a Dem sweep, right? I think that, and there's some more progressives in the government. So I think they'll try to regulate it more, but at the same time, oil and gas provides millions of jobs in the U.S. So you kind of have to, watch what you're doing. But I don't think that they're going to go crazy and, that the Green New Deal or, whatever the progressives have put forward will, pass in any way, shape, or form in that matter. But
they're not going to ban fracking anytime soon.
No, they don't. And in fact, they can only ban fracking on federal lands, mm-hmm. right? And companies, all the shale companies already anticipated this. I mean, anticipated what would happen if Biden wins. So they pretty much all renewed their leases, because once their leases are renewed, you can't just take them away, right? The ban can only be for forward-going leases from the time that you made the law. So, they already locked in for, the next 5-10 years.
Yeah, it's good. That posturing was very interesting in the run up to the election, the ban frack. I mean, it's... to me, it was such a non-issue, but I think it's because a lot of people, don't really understand. They're like, yeah, they're going to shut down the whole... No, that's not how it works. It's up to individual states, federal land, or, federal government. But, that really only affects like New Mexico the most. Yeah. Oh, interesting. Why? Because they do more new exploration.
They have more federal. Yeah, they have more federally leased lands. That's why.
Did you say New Mexico or Mexico the country?
New Mexico.
Oh, New Mexico.
Yeah.
Didn't we just find a bunch of rare earth metals in New Mexico? Or am I
imagining? So yeah, I think so. I think they're supposed to be building some mine there. I don't know where they're at within kind of their timeline, but they are building a mine there.
So Tracy, this is tying into everything I think about, right? Because Bitcoin miners specifically, we're worried about the supply chain of the chips that allow us to mine Bitcoin. Very concentrated in East Asia right now, predominantly between South Korea, Taiwan, China, Malaysia, I believe, in terms of the foundries that make the chips that make Bitcoin mining possible.
Right.
And so I have this grand 10-year vision for great American mining. Not me, the team.
The team.
We have
no, but I think that's good. I mean, right now, look at what's happening, and ever since the coronavirus happened. I mean, you follow me on Twitter. I was harping about supply chains all the time, and we started seeing supply chain breakdowns, right? And we're still having supply chain breakdowns. We're still having a semiconductor shortage because supply chains are still fractured right now. I mean, India, just had a bunch of their car companies basically had to, stop making cars right now. Only, they only had enough chips for, 1 or 2 of their brands. And we're seeing that globally, like a chip problem globally, even though South Korea's exports are way up, they still can't fulfill all the orders because we're still having supply chain problems that's already back. So, if we sort of bring back some of that to the US, I think that would be, or to North America. Um, yeah, I think that would be a very smart thing to do.
Right. So not only secure that supply chain. So here's the Great American Mining 10 to 20 year vision.
Okay, tell me.
Let me know if you think this is crazy, earnestly.
All right.
It might be crazy. But
Let's
due
hear
to
it.
the growing waste gas problem, flare gas problem in the oil and gas industry, and the financial situation that the industry is in right now due to a misallocation of capital over the last decade, they're going to turn to Bitcoin mining because, number one, it's profitable, and number two, they need to do something. So use this Bitcoin mining vehicle to develop a revenue stream that eliminates your waste, makes you more profitable, which overall makes you more resilient and less susceptible to the OPEC plus supply fuckeries that went on last year. So you sort of create, we already have energy independence to a degree, but we don't have that independence from the whims of the Saudis and the Russians. So if we're able to use the waste gas to mine Bitcoin to solidify the balance sheets, we really don't need to worry about that as much anymore. And on top of that, so that's going to be, we have at Great American Mining, we've run the numbers, we've back tested the data of how profitable mining Bitcoin with waste gas is. And it's compared to Henry Hub prices right now. I believe you're gonna get something like 7x Henry Hub prices per MMBTU, which is pretty crazy.
That is pretty crazy.
So that's going to be a profit driver, solidify the balance sheet. Then these producers are going to look and say, hey, we have all this infrastructure. We have all this capital invested in this Bitcoin mining infrastructure. And hey, guess what? The computers are made in other parts of the world that we don't like that we don't like that risk. So they lobby to mine the rare earth metals in New Mexico and take them to the foundry being built in Arizona and start building Bitcoin mining chips, particularly, and other types of chips on U.S. soil. So there's this natural, most beautifully about it all, it's a natural profit-driven incentive to make supply chains more robust and multiple industries more robust in this situation, the oil and gas industry and the computing industry.
I like it. I mean, I'm all for, I have been all for, kind of bringing back supply chains here and not having to be so dependent on China, especially for rare earths. We kind of, you have Africa, but again, if it's available here, if you could do it here or Canada, you could do it in North America, or Mexico even, that's all the better.
Yeah, and even if somebody wants to take the conversation to, it's like how profitable that can be building this stuff over here. I think, again, like we've mentioned, the vulnerability of the supply chains has been laid bare over the last 12 months has really highlighted the fact, hey, we may need to pay up to get these goods and have them distributed. And couple that with the fact that Triffin's dilemma seems to have been pretty accurate and have played its course. Like the product of outsourcing your manufacturing and flooding the world with dollars in the process to retain reserve currency of the world is not advantageous in the long run.
Right. Well, exactly, because, you've turned into a consumer economy versus a manufacturing economy. So you're not a productive economy anymore. And so, that's, I think, in the long run, you have to find some balance because that's unsustainable. Over the long haul, in my opinion. Yeah, and I mean, and if you think, and I was just thinking about this, even look at the shipping industry right now, the supply issues we're having with shipping, how expensive it is to ship right now. I mean, shipping rates are insane, and we're having all sorts of backup problems and everything like that. So bringing it back home, is still, when problems like this come up, you don't have to worry about it. So I do think it's economical if you take away, shipping rates, having to depend on, time to get it from, China to the US, for example. We've had container shortages this year. I mean, if this year has taught us anything, that everything that could go wrong went wrong this year, pretty much, right? So, it's time for us to really get serious and bring some manufacturing back to the U.S. and bring some mining back to the U.S.
Some Bitcoin mining.
Bitcoin mining, yes.
and rare earth metal mining.
And rare
computers.
Yes.
And again, going back to the fact that I love Bitcoin in this particular case, and maybe before we jump in, or after I say this, we should jump into your thoughts on Bitcoin. But I love Bitcoin in this particular case because it provides a free market incentive to drive these changes. We're not waiting on the government to step in and sort of lead the way. And the market's creating this incentive. There's this arbitrage between the low cost of the gas, the waste gas provides Bitcoin miners to mine Bitcoin very cheaply, and the need for the oil and gas industry to solve that waste gas problem. So the arbitrage that exists there is just a natural occurrence in the market that people seem to be taking care of at the moment. So to me, it's beautiful that the free market is just purely incentivized by profit to fix this problem. But we got to get your thoughts on Bitcoin. I know we've been talking about it, and I've been talking to the audience with them not having the knowledge that we had a full conversation last night. So
it's like, I don't really know a lot about, I don't know. I know this is terrible. I'm on a Bitcoin show and I know little about Bitcoin.
Well, I don't wonder how much you know. I want to know what you think.
No, I mean, I think that it's great just because it's kind of an everything vehicle, right? It entails so much, right? Like it entails it's a financial thing, it's a psychological thing, it's cryptography, it's computer science and engineering. I mean, there's so much that encompasses this one asset, right? So I think it's I think on that respect, and it's decentralized, obviously, of that nature. I mean, how I kind of look at digital assets is more from the oil and gas perspective. Like, how can we use digital bearer bonds or digital bearer assets rather than you get in the futures world, right? So you get it's kind of what I like what Abex is doing. If you take delivery of oil or gold, whatever, you get a warehouse receipt, which is basically a piece of paper they literally FedEx to you, right? And if you lose it, you're screwed. You don't get your, that's it. That's all you got is this piece of paper, right? So if you turn that into, and those warehouse receipts are called bearer assets. So you can literally exchange that piece of paper for the gold, or you could use that piece of paper as collateral, and you could put that piece of paper up for collateral at a bank if you wanted to get a bank loan, et cetera, et cetera. But the easier, the more efficient, better way to do that is to turn that into a digital bearer asset, right? Which is kind of what Abex is doing, and they're using Ethereum to sort of tokenize that, right? And then there's your token, and then what you can do is, you get it immediately, right? Mm-hmm. which is a good thing. You're less likely to lose it, and it's also traceable. So it's I could get that piece of paper, that warehouse receipt, and go to 5 banks to get a loan against it. And who would know that I went to 5 different banks and was over leveraged on that. And that kind of cuts out any kind of, it's more transparent that way, because you would, if you went to the second bank, they would already know immediately that you already went to another bank. So it kind of cuts out a lot of the problems that, kind of are with this analog, archaic system that we're currently using.
Yeah. No, I mean, that's the big innovation Bitcoin solved, right? It's the digital bearer asset that you truly possess. And yeah, no, I think it'll be interesting to see how that world of tokenization, particularly security tokenization and asset tokenization, comes to be. I mean, I'm more skeptical about that coming to market in the next decade. I know Josh at Abex, and what he's been building is huge for like settlement and massive, but like mainstream stuff. It'll be interesting, especially building like on Ethereum right now. Again, I'm just like thinking out loud here.
I mean, I think that eventually you'll be able to do that without Ethereum. I just haven't totally figured out a way yet.
Yeah. Yeah, eventually I imagine it would be anchored to Bitcoin in some way, like with some cooler color.
Yeah, there's going to be a better way to do that. I mean, I think there'll be a more efficient way, but at this juncture, it's kind of, the best option, and just to kind of get that whole system kind of going, right?
Yeah, no, but in terms of just Bitcoin alone, the innovation it provides, the settlement and clearinghouse markets, just being able to settle 24/7, 365
in 5 seconds, not even 5 seconds.
Yeah.
So.
Yeah, with the technologies like second layers, like the Lightning Network being built, you can do it instantaneously in some cases, which is insane. Like Jack Mallers, the podcast. Yeah, I know you told me you listened to that.
I listened to that one. That dude has so much passion. Afterwards, I was like, yeah, Bitcoin.
Right.
Oh my God. I was like, this kid's he's got it, man. He's got it. But it's infectious.
It really is. And it's hard not to get jacked up after speaking to Jack. And again, pushing the edges of innovating around this I don't want to say archaic, but something that's been around for some time, which is the settlement of assets around the world within the global financial system. There's a new rail to do that, which is insane.
Really, nothing's really changed in like 40, 50 years, right? I mean, it's the same, even though, we've gone from analog systems to, computer systems to, some sort of digital system. The basic function has not changed or evolved. You've just turned what you used to do in an analog way now to you're doing it on digitally through a computer. It's just like what we were talking before, where you had traders doing hand signals, and then it's the same exact process. It's just computerized now. But there hasn't been any real sort of innovation to flip the system on its head and do it better, do it differently, do it, have it decentralized, have it, so that's kind of where I find, this, Bitcoin and this whole thing, that's where I find it just really exciting.
Yeah, the fact that it's open source technology and you don't have to ask permission, you just go out and build stuff that's better and bring it to the market and say, hey, it's hard to deny this is better. You should be using it.
Exactly.
Yeah, but in terms of like, just curious, like your thoughts on Bitcoin, the asset, as a sound monetary good.
I mean, I think it's a good idea. I mean, I think it's, I think everybody should own, a little bit. I run like an oil and gas portfolio, but I had, the family office that I, work with, I had them buy Bitcoin a while ago. I have some myself, but I mean, I'm out there telling, bigger funds than me. that I think that it's a good idea. I mean, I was kind of skeptical at first, just kind of like everyone does, but the more I read on it, and I think the more that it's accepted, and things of that nature, just is going to make it stronger. And it's really, I think, more just about educating people on it. So if you ask, and if you're on Twitter, guys, people ask questions. Don't be mean. Answer the question.
You got to be careful. The Bitcoin Twitter swarm is not shy. I guess we could put it that way.
Right. But no, absolutely, I'm all for it. Like I said, I told people about it. I'm super excited about everything that's happening around it too. All the peripheral stuff that's happening.
Yeah, no, that's sort of how I wanted to frame the question. Like, how do you view Bitcoin in the context of what's going on with the central banks around the world and all the money printing, and like, what are your thoughts on?
Well, I mean,
on the monetary situation in the world right now.
I think it's a shit show, to be honest. But we already know that, right? But I think what is, besides all this money printing, and we have inflated assets and things of that nature, all the problems. The thing I'm more concerned about, actually, at this point, is the CBDC, the digital currencies.
Mm-hmm.
Just because I think you want to stay as far away from that as humanly possible. And I think if they one day decide, forget it, we're not going to have paper money anymore, which probably would take a very long time, but just if they do, right, and they only have this central bank digital currency, you would thank God that you had something else.
Right.
Because, it's a centralized digital currency that basically they can turn off if they want. I'm sorry, we don't, you broke the law, we're turning you off.
You had some wrong think on the internet today. You can't spend your money for 12 hours.
Right, exactly. I know it sounds far-fetched, but look at the pace things are headed. I don't see that. China's going to do it, right? For sure.
China's already doing it to an extent. I mean,
yeah,
they have their social credit system, and they bar people from WePay and Alipay,
right?
The time.
Exactly. So yeah, I think everybody you're going to need an alternative to that. Unless you want to rely on the unelected Fed.
Yeah. You got Ken Rogoff pushing this hard already. He's written a book trying to push us to these digital currencies. I don't think he mentioned CBDCs back then because the concept didn't exist. But yeah, the normalization process is well underway to normalize negative interest rate policies in a cashless society.
I know, which just scares the hell out of me, to be honest.
It should. It should scare you freaks too, but we like to stay optimistic here at TFTC. I think the prospect of CBDCs actually gaining any market traction in a world in which Bitcoin exists is very low. That's the beauty.
Unless they make you take it, right? Unless they're, because unless they make you take it, unless that's the only way that you can get money. But which is, for the most part, a lot of people. I mean, Bitcoin, even though it's been around for 10 years or whatever, it's still in its infancy stage, right? I mean, there's still a lot of people that aren't really allocated.
No, you got to get in, freaks. More people will come. They'll come.
Oh, for sure.
No, but it is a worrying prospect. Do we get the Chinese surveillance state exported to the rest of the world? And it seems like our government overlords would like that.
Actually, at this point, it does, which a little bit. I know that sounds a little paranoid, but just look at things, how things are going, right?
Yeah, I don't think it's paranoid. I think you're just being observant.
Just be aware. That's all I have to say. Just be very aware of what they're doing.
That's one of our taglines here. Be aware, freaks. Be aware. This stuff is out there,
Right.
and it is it's fucked up, right? Like let's Fed bash here for a little bit. Not only does their monetary policy on the front end, like on the actual interaction with the markets, like overtly screw you over because they're distorting the pricing mechanism of the world with their interest rate policies and decision to expand and contract the monetary supply. And then on top of that, they want to cattle herd you into this digital world in which they have complete control, tax you immediately.
Exactly.
Tell you where you can and can't spend your money. Hey, guess what? You got to support the soy farmers. You can only buy X amount of goods, and
you can only buy this. So, by the way, your paycheck has to be spent within 4 weeks. Else we take the rest. I mean, that's an extreme example, but
hey, this is efficient money management at the hands of our government overlords.
right. And if you see how efficient the government is, then that should scare you.
Right. That's another thing that gives me very, very great amount of optimism about the future is the fact that confidence in our government institutions is at all-time lows, as it should be. I like to have a view of the future in which things don't like go to shit and people just boringly are like, all right, this doesn't work anymore. Let's just start focusing on Bitcoin and other stuff and walk away from the clown show of the clown world.
Well, we gotta, I don't know, start by voting these people out. Lord, how old is Nancy Pelosi?
She's old as fuck. It doesn't need vote by building out Bitcoin and make them obsolete.
Well, okay, and that's how you do it. Yes.
No, I'm not. I mean,
but in the meantime, realistically, we gotta do something. Like, have to do something.
Trump came to drain the swamp, but that doesn't seem to have happened.
Yeah, they're all bad.
Yeah, no, they're all terrible. That's what it's. I've become completely disenfranchised from participating in that. It's just like, hey, WikiLeaks proved in 2016 that the DNC really didn't attempt to respect the will of the American citizens, particularly in the Democratic primary. So even if you do participate and try to vote these people out, there's evidence in the past that they don't really give a fuck and they're going to do what they want.
That's true, but I'm not giving up hope on people.
No, that's Bitcoin is so we can. That's the other thing with this being a digital bearer asset. Bitcoin
right
demands extreme ownership and extreme responsibility over your own domain, particularly your digital bearer asset,
right,
which begins to emanate in other areas of life. Like, why should I be begging these politicians to fix my life? Why can't I just build a better life for myself? And I think Bitcoin, the open source project, really personifies that and allows an individual with that type of thinking to bring that reality to fruition if they please.
Yeah, absolutely. That's what Jack was saying, and that I was like, wow, I didn't really look at it from that angle before, because I look at everything very financially generally.
Yeah, it's good. Tracy, you want to hear my craziest theory about
yes
Bitcoin, the oil and gas? Not craziest, but
yeah, I want to hear it. Come on.
In Great America Mining, we think oil and gas producers are going to be some of the largest Bitcoin miners in the world, just because of, again, the pure incentives that the arbitrage opportunity is presenting itself right now.
Right.
And energy producers at large. So hydroelectric producers, people with huge wind and solar farms, geothermal, all these energy producers are going to become the biggest Bitcoin miners in the world. And then ipso facto, these energy producers become the new central banks of the world, where you replace the Fed window and the access to the production and divvying of capital from the Fed window, which primary members only have access to now, to these energy producers mining Bitcoin, which becomes the mining pool level would become the new Fed window, if you will, and people will access capital via these Bitcoin mining pools, and we'll shift from these suited, stuffy central bankers in cities around the U.S. to a central banking system run by the energy sector that finally brings Henry Ford and Buckminster Fuller's visions of a currency backed by energy to fruition.
Oh my God, I love it. I love it. I'm sold. Seriously, I love it. I love it.
It's going to happen.
I like it. I love it so much. Well, I mean, mining, obviously, oil and gas is kind of my thing. Some the industry that I really that I focus on, and that's sort of my drive. So, yeah, I love it. Let oil and gas companies rule the world. Wouldn't that be a twist? I would love it.
It would make sense too.
Yeah, why not? I love it.
Not right. I mean, yeah. Well, that's the other beauty of the Bitcoin network too. It'd be very distributed. So it wouldn't only be oil and gas companies. It'd be renewable energy producers as well.
Oh, sure.
But then you'd also have I don't want to say it'd be fractured, but it'd be much more distributed in terms of decision makers and stakeholders, which makes the likelihood of actually changing the monetary system decrease significantly, which is what you want in Bitcoin. You just want to make sure the $21 million supply cap is respected. But in terms of building financial services on top of Bitcoin mining companies, because they're the first to access the capital in the Bitcoin network, which is the token, could be some really cool stuff.
Yeah, I like it.
Yeah. Am I just crazy?
No.
Like a crazy uncle?
I think it's not. Now you got my. Yeah, now I'm going to be thinking about this all night long. See, because now you got the wheels turning.
Oh, so, that's good.
Yeah.
What worries you most about Bitcoin?
So, I haven't learned enough. To be honest. The only thing that, that besides my own, I do definitely need to, I'm behind the 8 ball for sure. But the only thing that I worry about is, can the government shut it down or regulate it out in some way? And I don't know the answer to that. Because I don't know Bitcoin well enough.
I think they're certainly going to try. They are
for
trying.
Sure. They already, I was going to say, they already are. You just had that, but UK regulators just came down. So, I know it'll probably be only, a matter of time when, if these central banks start these, CBDCs, that's when they're really going to try to, because it's a direct threat to, or what they perceive as a direct threat to their currency.
Yeah. And I mean, they're going to throw the book at Bitcoin. It's the narrative of the alt-right domestic terrorists beginning to turn to Bitcoin as their currency of choice is starting to proliferate. So I think it'll definitely get labeled a domestic terrorist currency at some point here in the next 6 months, which will be interesting. And then, so I think I wrote about this yesterday in my newsletter. I think the potential for a great mass unplugging or attempted unplugging of Bitcoin is on the board as a possibility. The government goes to Amazon, Apple, and says, "Hey, do what you did to Parler, but to all the apps that give people access to Bitcoin." Which would be a big test, and it'll be particularly AWS unplugging anything Bitcoin related or not allowing anything Bitcoin related to happen, because then it will see how many individuals are actually running the network on hardware that they possess. And if it survives that, then it proves that, number one, the government can't shut it down. It's probably secure and robust enough for mass adoption.
Right.
So these may be necessary hurdles to overcome, but they will certainly be uncomfortable.
That's a good way to look at it, actually. Necessary hurdle. I like it.
Yeah.
Because, and the thing is that people know that it's likely to come. I mean, it's not like, they're unaware, right? So you have all these people saying that they're just going to shut it down. It's not like, you know, um, people don't, Bitcoiners don't already know that, right? So,
Yeah.
I think if the community is kind of prepared for that and kind of looking at alternative ways to circumvent those situations and any kind of regulation that would come down, then it's, very survivable.
And that's another selfish reason. Not selfish. It's not the only reason, but it actually works out in our favor at Great American Mining in the long run, and Bitcoin's favor in the long run, is getting these oil and gas producers tied into this and invested into this, more importantly, because it's a very strong lobby you have there on Capitol Hill defending the oil and gas industry. And if Bitcoin mining were to become a significant capital outlay for the industry at large, I think
they would definitely have something to say about it.
Exactly. So there's these weird Bitcoin entering the geopolitical world is very interesting, because as somebody who considers himself anti-statist and really doesn't like to participate in it, I do find joy in seeing individuals like Cynthia Lummis attain a senatorship to defend Bitcoin on the Hill, using vehicles like lobbying to defend Bitcoin. I think a lot of Bitcoiners are finding out, particularly this year, as the narratives around Bitcoin emanating from the Treasury specifically begin to get more hard line, that we may need to play ball within the system to a certain extent.
Yeah. I mean, it is what if they're going to try to bring rules and regulations against you, you're going to have to find creative ways to be prepared for that. Right.
Agreed. Tracy, am I boring you now at this point? I'm just like...
No. No, I like this one. I like this whole oil and gas Bitcoin mining thing is really cool.
Yeah. Imagine if Bitcoin mining, it would compete with midstream providers at some point, or if you really think about it.
Yeah.
Like, should I pipe this gas to the midstream provider and get the markup? It'll add value to it, sell to market, I'll get the royalties, or particularly in the context of a mineral rights owner.
Right.
Or I just take this gas and mine Bitcoin myself, take the midstream company out of it. Which is that's the other thing in terms of creating a price floor for natural gas markets.
Exactly. That's exactly what I was going to say. And then also, it really, it helps the market as a whole, right? In general, because you would definitely have a floor under the price. You saw, Waha this year twice went negative, which is pretty ridiculous. Obviously crude did too, but that's the first time for crude. It's not the first time for nat gas, and that just shouldn't be.
No, as a species, it's something we should be embarrassed about. Look at all this wasted potential energy.
That's exactly.
Literally being set on fire and sent to the atmosphere, or just sent to the atmosphere.
Exactly. So,
from a narrative perspective too, like, hey, Bitcoin mining replacing pipelines that would otherwise have been built, maybe not have been as profitable, and certainly would have been I don't want to say bad for the environment, but it would have annoyed people that those pipelines were getting built.
So, I think it just makes it forces people to be more efficient too, which is kind of, we need some sort of that in the industry right now, like some sort of impulse control.
Right.
Some sort of like, being capital efficient.
Right. And that's the metric we were starting to hone in on at Great American Mining, is the energy intensity index, and how Bitcoin helps lower that.
Right.
Because we're pretty sure the flared gas is counted in that ratio. I could be wrong. I'm sure my engineer Reed's listening to this and screaming in the background, but in terms of being as much efficient from a joule consumed to GDP ratio,
Right.
I mean, this certainly helps because miners are mining for Bitcoin, which adds to the bottom line, the GDP. Bitcoin miners do pay taxes at the end of the day, freaks. So
there you go. It's a win-win situation. I like it.
yeah. Well, Tracy,
Yeah.
is there anything about like oil markets I should be asking about that I didn't ask about yet?
No, no, I don't know. I mean, I think they covered a lot. Really, I mean, let's just see again. Look for prices are going to spike here because within the next year now.
It's because of the shock of
Just
demand
because
for
we're going to have a supply shock because the thing is that we're not going to. Everybody has this time frame, right? On we're going to be green tomorrow. Let's not forget, like the solar industry started in the 70s, right? Everything takes way longer than you think it's going to happen. We kind of always say, if you think that, electric cars are going to take over in 10 years, add 15 to it. Because that's just how long that things take, and sometimes longer. And the transition's not that easy, even if you have the whole world wanting to do it. So, oil and gas isn't going to go away anytime soon. I mean, it's in literally, you can't make it through one day without using at least one product that has, that has petroleum in it. I guess unless you're living in a bamboo hut. But the rest of us, you that use computers and brush our teeth and things, use products. So that demand's not going away anytime soon. And as soon as the economy starts opening up again and things like that, demand's going to come back a lot sooner, and we're going to have a supply problem, a big supply problem.
Yeah, you should tell California this. They're going in the wrong direction.
They are. Well, they have rolling blackouts or whatever. Look, the UK is having the same problems too because their wind farms, they had no wind and they're, overloaded during the winter because it's cold right now. So you kind of have to think, California's grid was ridiculously mismanaged, and but
didn't they just decide to shut down other gas?
Yes.
Facility in LA County or something?
Yes, because they're smart. No, they're ridiculous because they don't have a plan. They didn't think this through, and they don't have a plan, right? And they're trying to actually. What I found interesting is just this last week, Sonoma County reversed their decision not to have natural gas in new building construction. So I think that maybe people are kind of waking up over there and thinking, it might not be nice to have power.
Yeah, small concession that, all right, even though we want to be all granola up here, we do have to deal in reality.
Right.
These renewables are not there yet. They should get there.
Yeah, it's just not right here. It's just not now.
And Bitcoin does fix this too, because Bitcoin goes to these stranded renewable sources and consumes it, thereby driving innovation around them. If you're going to be tinkering with them or consuming them more, hopefully something innovative will come out of it. Very bullish on Bitcoin helping to innovate the whole energy sector from fossil fuels to renewables. I had another oil focused question, but I can't think about it right now. I can't think about it.
Okay.
We'll have to discuss it at some other time.
Yeah.
I don't want to take up too much of your day. I know we're almost an hour and 20 minutes in, potentially more. But thank you for joining my Crazy Bitcoin podcast and answering my questions about the oil and gas world.
Yeah, absolutely. It's cool. It's a pleasure. I mean, I don't know that I remember that night on Twitter, like, you want to come on my podcast? It was like, yeah. Everyone was like, what?
I'm sorry about Bitcoin Twitter coming after you there. That's what I had to step in to say, hey, freak, stop Stop hounding Tracy. We'll have a talk on the podcast. No, it'll be. Yeah, again, the Bitcoin Twitter is really vicious, if you will. Very protective of Bitcoin. That's the interesting thing about Bitcoin, the network. It has the social layer to it as well. It's not protected by an HR department or a PR department. It's got individual users. But it doesn't matter at the end of the day. Bitcoin just works. You can advocate for it or not. It's going to do what it does.
It's the beauty of it.
Yeah.
So that's cool. I'm good. I'm looking forward to more of your podcast and learning some more. I'll be calling you. What does this mean?
I told you last night. The avenues of communication are wide open. If you have any questions, please do not hesitate to reach out.
Fantastic. Thank you. I appreciate that.
And I will continue to annoy you about oil and gas markets as well.
Deal. You can call anytime.
All right. We already mentioned that we can find you on Twitter at Chai Girl. Is there anywhere else you'd like to send the freaks any information?
Yeah, well, I'm on a hedge fund telemetry, right? I'm a materials and energy strategist there. So I don't know, you can sign up for like a 2-week trial or whatever if you just want to kind of check out what I do.
Go check it out. Again, freaks, Tracy's an OG on my economics and finance list on Twitter. Has been there for years. I feel like I've been getting quality information for you for most of my adult life now, which is weird to think. But thank you for that. And thank you for, again, not only coming on here to answer my potentially dumb question about the oil and gas markets, but listening to my definitely dumb rants about Bitcoin.
No, I love it.
Markets.
Love it. And thank you for having me on. I had a good time.
Yeah, we'll have to do this again at some point when something big happens in the oil markets, or we can just have a retrospective on how Bitcoin mining took over the oil and gas sector.
Absolutely.
Right. Well, Tracy, I hope you have a great night. Thank you for joining.
All right. Thank you.
Peace and love, freaks.